Good morning. Hey, what's up? This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful and windy Lauderdale by the Sea. Got to be blowing a good 15 to 20 out there, it looks like, and you can tell by the oceans, that's for sure. What is it, 73 degrees, another beautiful day out. We haven't hit our summertime yet. As I said, we don't have a spring in South Florida. If you live down here, you know that. Hey, let's get into some, what I'm going to call back to the basics here. And you've watched this show for any amount of time, you know this is basically what we keep coming back to, the basics. And the basics is what is really driving our market. What drives the gold and silver prices? The real basics. And what are the basics that we keep talking about over and over like a broken record? And I'm sorry, some of you folks have been listening to me for a year now almost, will know exactly where we're going here. Gresham's Law. The basics here. Let's talk about the real basics. Gresham's Law. What is Gresham's Law? And I love Investopedia, by the way. Can't stand Wikipedia when it comes to financial stuff. They always like to add their own little political spin and everything. Like Investopedia, they don't seem to do that. That's my recommendation, that you put Investopedia on your bookmark bar as well. Gresham's Law is a monetary principle stating that bad money drives out good. It is primarily used for consideration and application in currency markets. Gresham's Law was originally based on the composition of minted coins and the value of precious metals used in them, which is a really good story. If you get a chance, read the rest of this. Go to Investopedia and type in Gresham's Law. You'll find the story, and you'll find this whole thing very interesting, and you'll be smarter than the average bear by knowing this. However, since the abandonment of metallic currency standards, which is where we're at today, since Nixon took us off the gold standard in 1972, I think it was, and the theory has been applied to the relative stability of different currencies' value in global markets. Key takeaways, and here's a primary key takeaway right here. Gresham's Law says that legally overvalued currency will tend to drive out legally undervalued currency out of circulation. Well, that's going to be generally true. Say, for example, you live in Venezuela. Think about it from this standpoint. Very simple. You live in Venezuela. The bolivar, I think that's how you pronounce it, is decreased in value so much that it takes 1,000,000 bolivars to buy a loaf of bread. Or it's worth about 50 cents maybe. And I believe that is currently true, if I'm correct. Their 100 million note is worth about 50 cents at this time. So what happens in Venezuela? Well, same thing that happens all over the world is people don't want to use the bolivar. They don't want to use Venezuelan currency because it's so devalued, it buys nothing. They don't want to hang on to it for sure because next week it'll be worth half the amount. And I may be exaggerating, but that's what happens in an hyperinflationary economy. So what do they hold on to? They hoard U.S. dollars. There are so many U.S. dollars in Venezuela, it's not even funny. And this basically drives out the Venezuelan currency. And that's Gresham's Law in a nutshell. However, there's another way to look at Gresham's Law. It says here when a currency drives out another currency. Well, how about when a currency is not wanting, no one wants to own a currency, any fiat currency for that matter. Let's look at the U.S. dollar. The U.S. dollar would be considered one of the strongest fiat currencies in the world, and it probably is. We are still the 800-pound gorilla when it comes to fiat currencies in the world. We're the world currency. The dollar is still the world currency, more or less. That may change, and that's not a good thing either for us. But the dollar, even people want to get out of the U.S. dollar, and they want to get in because they know that it's a fiat currency, and they want to get into gold and silver. And this is, again, what drives gold and silver prices is Gresham's Law. People want to get rid of money or currencies that they believe are going to continue to fall in value and are going to be worthless one day, even potentially, and they want to turn it into something that they think that'll hold its value. And what is that? That's gold and silver. And we're going to find out, and a lot of people are going to find out, not necessarily the paper gold and silver, but real gold and silver. The stuff that's been around for 5,000 years. Gold and silver has been around for 5,000 years. It's outlived empires. It's outlived corporations. It's outlived currencies. There's no currency that's outlived gold and silver as a form of money, as a form of protection. It's been around for 5,000 years, folks, longer than anything. So it has an excellent historic track record. And what we're seeing right now is people fleeing from the U.S. dollar, wanting to put their money into something else. Why? Because the U.S. dollar is a fiat currency. And we've been a fiat money since we came off the gold standard. Nixon took us off the gold standard and said we're all Keynesians now. Get over it. We're no longer backed by gold, and that's when we'll take a look at the charts here in a moment because I'm starting to really like charts. But that is what is causing. This is what's causing people to buy. What drives gold and silver prices is Gresham's law and the fact that the U.S. dollar is a fiat currency now, and it has been for since the 1970s. In fact, historically, the U.S. dollar is the longest surviving fiat currency in history that's lasted without being devalued. Well, you can argue that point, last without being devalued, but we haven't had like zeros added to it and that kind of thing, or they haven't called in the currency and changed it. So we are, in fact, the longest surviving fiat currency in the history of mankind right now. That's the U.S. dollar, and that's only been since 1970. So what we're seeing is we're seeing the all the fiat currencies all over the world. The U.S. being the strongest. You've heard the term "the last horse to the glue factory." And you think about that, that's kind of funny. How could you be a winner being that? Well, if you're the last horse to get to the glue factory, you're the last one to be killed and put in the glue pot. So that's probably being a winner. And the United States fiat dollar is probably going to be the last major fiat currency to fail, so to speak. Well, it's tough to say. That's yet to be seen. No less, that's what drives gold and silver prices is fiat money across the world, and particularly the U.S. dollar for us Americans here. And it all comes down to Gresham's law. So let's move into what that looks like on the chart here. I think this is pretty interesting. I'm starting to look at charts more. Love these macro trend charts. They give you so many different options to kind of customize them. Not so much for the Treasury, I noticed the Treasury rate and the U.S. dollars, but 10-year Treasury rate, 50-year historical chart. Let's take a look at this right here. It starts here in 1973, and I moved the gold chart. But as you see here, remember 1980, gold prices hit around $850 an ounce. Silver, I think, was $50 an ounce. And adjusted for inflation today, that's probably, in my opinion, at least 10 times that amount. But again, I don't think you could trust the official CPI numbers for that. I think those are skewed, and they skew them all the time. We'll get into that in a minute as well. But take a look at the U.S. dollar Treasury rates here. My God, that was during the Jimmy Carter days. And again, that's when, it's funny enough, that's when Iran, the Ayatollah had taken over, and they had hostages. We had just come off the major oil crisis with the Saudis and all kinds of issues with that. A lot of similarities to what we're seeing today. Problems in the Middle East, problems with Iran. Except the difference here is look at those interest rates. Holy smokes! It blows my mind to think about this, folks. Look, and they say that when interest rates, treasuries go up, people get out of gold and silver, but look at the coincidence of rising interest rates at the same period when gold and silver, and let's take a look at gold and silver. So that kind of flies in the face of the logic that, when interest rates rise, gold prices are going to drop. But not of recent, it doesn't seem that way. So it works sometimes and it doesn't. It's really weird. But look at this price of gold here, 100-year historical chart. It looks like they have inflation adjusted. So what do they show inflation adjusted gold? They show 1980 gold at 2,200. Let's get rid of the inflation adjusted. I like that a little bit better to show for this example. And in 1980, at the same time interest rates were high, so were the gold prices. So that doesn't make sense, but it seems to make sense lately. Again, let me move back to this U.S. dollar chart and 10-year treasuries. What we're seeing here now, when you get into the treasury rates, is there is a correlation here. I'm going to move this little thing up to here, and where does that go to? Let's see. That goes to 2014. I think our little bull market started in 2016, our most recent one. And as you can tell, there's a dip right there, but there's a little bull market, and here we are right now with gold and silver prices. And let me see what the, hold on, that's 10-year treasury, all right. Let's do the same thing to the dollar chart. Let's take it to 2016. I'm going to go right up to here. And no, we got a little ways to go here. Sorry about that. I should have had these already set up for you, but I did not. Same thing, though. You get the point here. There you go, 2016. And you can see rocky road for the dollar, but same thing with the price of gold and silver. Let's take look at this chart here. I love these charts, by the way. I like the fact that you can play around with them and change things. 2016 I'm going to move that chart up a little bit as well and get there. There's our bull market in gold, our second one, I think, right there. All right. And let's just take a look at the correlation between these charts right here. As you can see, from 2000, where is it? 2016, oh, there we are right here. You see choppiness in 10-year Treasury yields. And let's take a look at the price of gold here. Overall, sorry about that, didn't mean to give you a little bit of silence, but look at the drop from here, 2018, straight down, and then back up again. And let's see the correlation with the gold chart here. 2018, notice that on 2018 on the Treasury and the dollar chart, that the dollar was falling dramatically. At the same time, we got a rising gold price, and then you see the strength in the 10-year. See it right here, right? Boom, 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 last August or so. And you see in the price of gold, we've got that same deal going on. Look, bang, bang, bang. Has everything to do with the people believing that the raising of the rates, and it was only to 1.6% has been the high for the last year or so, that the rising in the rates was going to hurt the gold prices. And I think what that really did is it didn't hurt physical prices, because physical prices, that's Gresham's law. People are starting to learn, well, listen, I want to own physical gold, not paper gold. I think there's a big transition, a big rush into paper or physical metals, and a rush out of paper metals. And I sincerely believe that when it comes to gold and silver. So I think that's why we've seen the big disconnect between what the ETFs like SLB, GLD, SPDR, and I believe that's it, and contracts, paper contracts, and what you actually have to pay for real gold and silver. There's a huge difference between the two. And I think that's because we do have a large amount of people, and again, follow this. Gresham's law also applies to ETFs, SLV, paper contracts as well, because they are paper. They're not the real thing. People want the real thing, so they're going to get out of paper contracts with gold and silver. They're going to get out of ETFs. They're going to get out of anything that's not real gold and silver. They're going to start buying the real product. The flight, again, Gresham's law, the flight to a better standard, a flight to something that holds its value. So I think we're seeing people get out of the paper markets and get into the physical gold and silver markets. That's why you see gold and silver physical prices so much higher than the paper prices. There, I hope I kind of circled around there. I hope that explains a few things. I don't want to make this show too long. Love these charts, by the way. And let's go back to the gold chart. I showed you yesterday the fact that you can set it by president, which I think is pretty cool. The 10-year daily chart, the historical chart, inflation adjusted. I like to show the non-inflation adjusted because it shows the real price. And I don't think you can adjust. I don't think you can trust what they're using the CPI here for the inflation adjusted chart. But folks, I don't believe you can trust the CPI. I think the CPI changes just to pretend that we don't have the inflation we do. Again, I digress, and that's a different story for a different day. Your bookmark bar should contain gata.org. I'm not going to explain why it should. We've talked about it a dozen times, and some of you are sick of me sounding like a broken record. Sorry about that. But what do we got going on in gat.org today? Banks find it more profitable to service the Fed than to lend to the real economy. Well, no duh, we find that. If you go out and try to get a loan, it's not like getting a loan back when the Fed was a lot freer with mortgages and that stuff. But the Fed's finding it that it's more secure. I mean, banks are finding it's more secure to sell stuff back to the Fed than it is to us, or give money back to the Fed. Plus, they get their little piece of the pie. Today's bounce in monetary metals is significant. Turk tells KWN. I'm kind of curious. Let's just take a look at that. We'll, Gata presses Bank of England and UK Treasuries for answer on gold leasing. Boy, that's been going on forever. Probably a worthwhile thing to read, though, if you click on your Gata site today after the show. Today's bounce in monetary metals is significant. Let's just kind of read a little, see if there's a little excerpt here. Sometimes they just do the shows, radio shows, and that's King World News. Man, he's the greatest bull in bullion markets that I know. Guy loves the gold markets, talks them up all the time. Today may be a signal that gold and silver are beginning the next leg up in their respective bull markets is a reasonable conclusion for a few reasons. First, the strength of both metals' performance today speaks for itself. Now, he's talking about yesterday after the big trashing from the dollar. He thinks we're kind of over the down legs that we're going to see. I don't think we're quite over this. I think if we see a crash in the financial markets. So anyway, something to read here. Go to your gata.org site and you can find King's opinions here. Why he thinks that this bounces over and that we're going to see upward prices from here. I believe that, but I still think we could see a big trashing gold, silver, and platinum markets, and that trashing will come from a collapse of all markets across the board. The collapse of the Dow, the collapse. If we have another 2008 like incident, you can pretty much say that gold and silver are going to get trashed. But the paper markets are just like they did recently, and you won't be able to find physical for anywhere near what the paper market said. Just like 2008, I've been through two of these major bulls, 1980, and I've been through the 2012 bull, and I saw the 2008 collapse. What happened with gold and silver? Let's move along there. Again, read gata.org. I talked about Scotiabank yesterday and how I didn't like Scotiabank, how I thought they were not good for the precious metals industry, and how I thought they did a bunch of seedy things. If you want to read more about that, it's funny enough, too coincidental that it's in today's Zero Hedge, which you can read for free. They don't charge you Zero Hedge to read their articles. They do show a lot of annoying ads, which I don't have to pay for because I pay $1 for the premium subscription. And by the way, they don't pay me to say that. Scotia sells COMEX New York Vault in slow motion exit from the gold and silver markets. You know why I think Scotia is selling the COMEX New York Vault in slow motion exit from gold and silver markets? Because they've done some really, really things that don't just border on probably the gray areas, but like a lot of the other manipulators do. I think these guys, my opinion, it's potentially that they did some really illegal bad things, and it doesn't surprise me. I've heard stories about Scotiabank. So down at the bottom here, let me see. I did see a little something. How's that for Xing? This will give discreetly sold this to another. Anyway, they sold their vaults and sorry, I just stuttered there. Scotia's gold and silver price manipulation. Fast forward to 2020, the U.S. Department of Justice announced that the Bank of Nova Scotia has entered a resolution with the Department of Justice to resolve criminal charges. Get this, folks. To resolve criminal charges related to price manipulation scheme involving thousands of episodes of unlawful trading activities by 4 traders in the precious metals futures contract. And we talked about this for years. It's funny, now the DOJ just figured this out, but a lot of us knew this was happening. We knew Nova Scotia and a lot of these big bullion banks and their traders were manipulating gold, spoofing gold. So Scotia got caught doing it to the nth degree, and they had criminal charges. And I think there's a lot more behind the scenes here that shows how scummy, in my opinion, this company really was. Good article to read. Make sure you read this. Scotia sells COMEX New York Vault in slow motion. Again, on Zero Hedge, you can read it for free. We'll be here all day if I start to read parts of it. Definitely put it on your homework for today. Another good article, The Equity Price Conundrum. Part 1, The Great Batsby. Now, this gentleman writes an article that he's, give me one second here, I'm kind of getting ahead of myself. The relentless rally in equity markets has pushed valuations to extreme levels based on traditional metrics. In this report, we analyze the 2 common arguments made by equity bulls and why this time is different. And the current valuations are justified. We find that either gold or equities are currently mispriced, as A, both arguments imply that gold should outperform stocks, and B, if neither of these scenarios play out, equities are due for a substantial correction. So the real question is gold going to go up substantially, or is equities and stock market going to fall substantially? Let me see, there's a good article to read, and talks a lot about what we were talking about here as well. A little bit complicated, but no less. Thus, the equity gold conundrum, I'm going to read the bottom part. I'm not a spoiler here. Conundrum doesn't disappear in the Great Gatsby scenario. In fact, we think that if we see strong economic growth over the coming years, it will be entirely debt financed, and a consequence, gold should. So if we do, a lot of people saying if we see economic strength, gold and silver prices will fall. Well, that's not necessarily true, folks. Just like interest rates and treasuries flying, like we saw in 1980 when the gold price was flying at the same time. The rule that, oh, well, treasuries go up, gold must go down. That's not true, folks, and we're finding that out, and this article points that out in a couple of different ways. Worth the read. Again, you can read it for free in Zero Hedge. Just way too long for me to read it to you. However, when I give you this stuff, I'm trying to make you smarter than the average bear, smarter. You know, there's so much bad information out there. If you watch a lot of these YouTube videos, and CNBC and Bloomberg and Wall Street Journal, when it comes to gold and silver guys and gals, they're terrible. They're terrible. They have the worst analysts. I don't know where they come out of college. They have no clue what they're talking about. They might be good writers, but when it comes to precious metals, they are clueless. So are the talking heads on TV. And I also find, unfortunately, that there is a large amount of talking heads on YouTube videos and a large amount of talking heads just in videos on generally online that have no freaking clue what they're talking about either. And this is why I'm giving you these articles. They will all, once you start reading this stuff and listening to what I've been saying for the last year, everything will start to tie together. And when you see these down prices with precious metals, it won't bother you a bit. Again, back to ZH here, and we're almost done. I just wanted to breeze over the headlines here. It's not what you know, it's what the market believes that matters. Absolutely true. You know, just because you may have an inside tip or something like GameStop is going to crash soon, or someone said, here's the reason why it's going to crash. If all the people that own it don't believe it, they don't get out of it, then it's really not what you knew, it's what all the other people believe that mattered. And that can apply to just about anything. Kind of interesting headline. I didn't even read it. I'm telling you a story based on the headline. Stocks exploded higher. What we've been talking about, CPI print. After fabricated CPI print, it would appear that the algos missed the fact that the BLS made it all up. And this is what I've been talking about. The consumer price index is full of shit. It's bullshit, folks. That's why when you see those adjusted for inflation charts I show you, I don't even like looking at them because they're full of crap. They don't even. What do they use? Televisions, new televisions as a inflation index for the inflation index instead of the food. They don't. I don't even think they use food in the inflation index. Anyway, I got to digress again. Don't want to make the show too long. Fears of a return of 1930s Dust Bowl. So many things in here just point to a poor economy or economy that's not really going to recover that much. And again, that points to higher in gold and silver prices, in my opinion. And really, even if the economy was going to get a little bit better, we're still dealing with a fiat currency, a currency that eventually is going to fail and buy less and less, even through good times. Listen, through our best times in the last 30 years, since the U.S. dollar became a fiat currency in the 1970s, even through our best times, the dollar has lost the buying power. The only reason we made money is maybe because of investments or better economic times, that kind of thing. But the dollar has consistently, even through the good times, lost its buying power for the most part. I'm going to go over the comments yesterday real quickly again. We're almost done with this, folks. I'm going to try to make these reports a little shorter. William says, Brian, hang on. I am sick to my stomach because my whole family won't buy any gold or silver. They say I'm nuts for buying some. No, you're not nuts, sir. Please say a prayer for them and all those who think along their line of thinking, because they are rich in dollars in the stock market and they will be in the bread lines. Well, yes and no. It's not going to be too late for them, Will. They'll be fine. Don't worry about it. Most of them will be fine. Some of them are just stubborn, and you got to make some mistakes in your life in order to learn. So, people are going to make their own mistakes. So you can only, you can lead a horse to water, but you can't make them drink. So relax. Don't worry about it. Lead by example. You can't force people to do things. That's my opinion. Just lead by example. And they'll follow you one day. They'll get out of their stocks when they crash, and then maybe they'll buy some metals and preserve what wealth they have at that point. Mr. Doms, yeah, first place to you, and a couple smiley faces to you as well. Picked up 3-ounce bars at $30.20. Not a bad price, sir. I hope you did it with your local dealer, Bab. I'm sorry, Bab. I can't see if it's who it is. Bab 77734. King Toba, you're welcome. Mac Poplin, thanks for hoping I'm well. Would I make a video explaining the average stacker should do expect if and when a price of silver and gold spikes up? Let me think about this. For instance, explain how physical does not trade like or as fast as paper. Oh, well, actually, we just did a little bit there, sir. If you want to be a little more specific, I'll answer some of those questions. If the silver spot price shot to 50 or 100, no dealer is going to pay that for a person of silver. You can't say that. We've seen, the high has been $50 twice so far. That's been the high. And most smart investors, when they see a bubble, or smart gold and silver buyers, when they see a bubble, they don't get that stubborn and say, you can't get greedy and stubborn. It's going to keep going. It's going to keep growing. But when you see a bubble, you start selling a little bit of your holdings off, and you take some profit. But we'll get into that more later. We're not even close to seeing gold and silver at bubble prices. Not even close. So relax there. If you keep watching my show, I will let you know when we do, Mac. Some people are expecting a windfall that won't materialize even if prices go up. There is no law that states dealers have to purchase metal at all or spot prices. Also, a year ago, did you sell silver at $12 spot price, no more premium, or did you raise your premiums higher? No, actually, the premiums weren't that bad. They were probably $2 over, $1.85 to $2 over, and it was a lot longer than a year when it was $12. Sir, you can't mistake these higher premiums with greedy dealers. You got to remember, especially right now, that mines were closed for a year, mints were closed for a year because of the virus. Retailers and wholesalers and buyers of gold and silver, scrap buyers, were closed for a year. I was one of the few dealers out there that was open during this whole time. A lot of them were closed, including the big major guys. So that really had a big impact on product. I'll answer that more later, Mac. Thanks for your question, and thanks for watching. Dewey says, I bought the effing dip, secured 10% profits from junior miners. One day I'm going to get into miners myself. I'm not going to talk about them on the show, but once I get a little time, I'm going to look into some miners and maybe invest there myself, junior miners. Anyway, good job there, dude. And lithium, cobalt, nickel, I have been saying myself that I think the equity markets are going to take a shit at some time, and that the next big markets are going to be commodities, physical commodities, tangible commodities, like lithium, cobalt, oil, and those kind of things. They can monkey hammer prices again. Yeah, absolutely, sir. Monkey hammering gives us a chance to buy at a lower level. Hey, thanks, Robert. Proper days. I hope it stays low just a little longer so I can get some. Listen, sir, there was a day when writers were talking about $1,000 gold. Wow, will gold ever hit $1,000 again? Can you imagine that magical time? In fact, I read an article, it was written in 2006 or something like that. No, 2008, that spoke about that. Can you imagine if gold, this is an analyst, a gold analyst, can you imagine if gold, we surpass that way, and there's going to be a point in the future, and it may not be in the too far future, where prepper days, you say, oh my God, you remember when gold was below 2,000, the silver was below 50? You're going to say that. You watch, if your living timeline is long enough, you'll say that, and you'll probably say it about the next level too. Rogue investor, these big banks have armies of lawyers to help them pull off this gimmick. Absolutely. Look what Scotiabank did. Scotiabank guys probably should have been, in the article I just talked about, probably should have been in prison, but they weren't because of attorneys, and but they still have some criminal things going on, I believe. That's why they can do whatever they do without going to jail. And the other reason they can do what they can do without going to jail, rogue investor, is because they are too, you ever heard the term too big to fail? Well, they're also too big to jail. So that's my opinion. Well, let's move along to the spot prices here. I'm going to refresh this because I haven't refreshed it in 20 minutes. And let's see where we are. Down a couple bucks. It was at 17, 18, and we'll look at the ranges today. Still are holding on to that above 17 mark, which is probably good. But again, who cares if it dips below the paper markets? Those fake paper gold and silver products dip us below 17. It'll just give you an opportunity to buy a little bit cheaper, even though the premiums are high. Range 1709, 1723 today. Silver. Damn, silver did not get nailed like gold did this year. Silver has held on to most all of its price, pretty much. It stayed in this mid-20s range. I love it. I love it. I think silver is going to make another leg up, and I think gold's going to move with it. I think both of these metals are going to move in tandem somewhat. I think the gold-silver ratio is kind of in line where it's been. At this point, again, I do see the metals moving in tandem with each other. That's my opinion. Platinum doing its thing, and palladium, who cares? Well, let's see what happens. Don't freak out if you see some lower prices. Just buy the dips when you can. At some point, the shit's going to hit the fan, and you're going to see higher and higher prices, and you're going to wish you had bought at these lower levels, even with the premiums. Well, that's really about it. Best deals out there are still gold bars and silver bars. I've got some good deals and some products, and I promise at some point that I'm going to discuss what us dealers pay for product. And I'm not afraid to tell you, because profit is not a dirty word. Anyway, I recommend that if you don't live in my area, because I don't deal online, if you're new to this show, I only deal face-to-face, and we're brick and mortar. So If you don't live near me, unfortunately, I can't deal with you, but I always recommend keep your money local. Keep the money local in your state if you can, in your town, in your city, in your county, whatever you can. Even if you have to drive an hour outside your county to find a dealer in your state, do it. Just keep the money as local as you can. I think that's very important. And if you can, if you can't, go to the big guys like JM Bullion, SD Bullion, APMEX Bullion. Those are the three biggies that I'm aware of. But your local dealer should be able to beat them. I can easily beat their prices, so your local dealer should be able to do that as well if you can find a good one. Well, that's really about it. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call me anytime at 954-493-8811 between the hours of 10 and 4. Happy to help you with your purchases or anything else you may have. If anything crazy happens today, I'll do another show. If not, I will talk to you tomorrow and we'll figure another topic to talk about. But you know, if you notice, all these topics tie into one thing. That's fiat currencies and Gresham's law. Hey, thanks for watching. Have yourself a good day and talk to you soon.